Good afternoon. I'm Diana Murray with ASAP Accounting and Payroll, and I've got some exciting guests to introduce you to here today. We are excited to dive into this very heavy topic that keeps changing, but hopefully we'll give you some good question and answer and feedback today that can help you make some decisions. So with that, I would like to throw up our agenda here about what we're going to talk about in today's webinar. Before we do that, though, I do want to give a couple bit of housekeeping in terms of Zoom. This is being recorded, and everyone will get a copy of the recording after today's presentation. It does take us a good 24 hours to turn that around, and we'll try to make that as quick as possible, but it does take some time to load that. So thanks for your patience. Also, if you could use the Q&A function of the Zoom control bar to ask questions, please try not to use the chat function. With the Q&A function, you're also able to review previous questions or questions that have been posed, and you can also upvote those questions. So if you have the same question, there's no sense in retyping it. You can actually use that Zoom control to get that question moved to the top. So thank you so much for joining us, and I'm excited to turn it over to our panelists today. We have Mark Betts, Senior Vice President here at ASAP Accounting and Payroll, and my colleague. We also have Brad Tafoya on, who is a partner and shareholder, CPA at Tafoya Barrett & Associates here in Durango. We have Alexander Price, Chief Strategy Officer, also on paternity leave, but he is with Citizens State Bank, so thanks so much for joining us on your leave. Yep, awesome. And with that, I'll go ahead and turn it over to Mark, I believe.
Yeah, just real quick, just some fine print here. We do have Brad on the phone, who's a CPA, but we're putting this information out there as best we can to get the information out as fast as possible to people to make business decisions to help them run their business. With that in mind, these regulations have been coming, releases every other day. Keep that in mind. This is our interpretations of how we're reading things as of today, and every situation can be unique. So we suggest you reach out to your tax preparer and any other advisor, business advisors, banking advisors, to confirm your decisions as you move along with this process. And I'm going to jump on into a quick update to start this presentation, kind of what has changed in the last week and the changes basically coming from the Flexibility Act that was signed 6/5, I guess now. And they've released what's called the EZ form, which we're going to showcase here quite a bit. The important items here are that the changes provide an extended coverage period of going to 24 weeks, optional to employers to select if they receive their loans before June 5th. For loans after June 5th, I think it defaults to 24 weeks. They amended the rule, allowing reducing the requirement from 75% to 60% of the forgiveness amount to be used on payroll costs. They've extended some of the safe harbor measures that were dated June 30th originally to be extended to December 31st. And they've kind of formalized some of these rules around employers' inability to rehire staff that they had laid off or similarly qualified employees. Also, there's some compliance in terms of the health guidance. Your compliance with health guidance has always been kind of an issue for restaurants and others, and quite a few employers for that matter, that are trying to do their best to keep their operations in line with state, local, and CDC guidance, essentially. And there's a new safe harbor provision in here that can allow you a lot of flexibility in terms of the FTE calculations. Let's see. There's also the extension from the loan side, from the banking side, of the maturity date for any loan after forgiveness period is now 5 years instead of 2. The deferment period is extended as well. It changes the deferment period from 6 months to the date the borrower's loan forgiveness amount is determined. It also clarified this employer payroll tax deferral allowing employers the opportunity who are in the PPP, provide them a means to do the deferment. And that's outside of your loan. It's a totally separate measure, but it's worth pointing out. It isn't a tax credit or anything. It's a deferral, so the money will still be due. It can help you possibly with cash flow. So we recommend you reach out to your account manager if you're one of our clients, or if you have another payroll provider, reach out to them to kind of learn more about how you can implement that if that's a measure you're interested in. All right, with that being said, this is Form 3508 EZ, and the important thing on here is to see if you're eligible for this shorter 2-page forgiveness form, or if you have to use the long form. We're going to primarily focus on this short form today in this presentation because we feel like the majority of small businesses with loans under $350,000 are going to be most likely the ones that would qualify for this one. I don't know if the dollar amounts is important. It's more, let's see who can use it based on these factors in here. And this is from the instruction sheet for this Form 3508 EZ. So if a borrower is one of those self-employed individuals, all those independent contractors out there, sole proprietors out there with no other employees, then this is going to be the form for you, which is good news. The 11-page form for those sole proprietors and independent contractors was confusing quite a few people. So that's one option for people who can use this form. The other is if the borrower did not, if they can certify that they did not reduce any annual salary or hourly wages for any employees by no more than 25% during their coverage period. And in addition, that they did not reduce their FTE counts, essentially. So if you can certify those two items, and there's some fine print that I'll let you read on your own, so I'm not doing it during this webinar, but I would recommend downloading those easy instructions, reading over these closely, and making sure that you qualify for one of those three. The third is the one, essentially, that the same salary, hourly wage question is still there, that you did not drop your wages. But it adds that option because you couldn't, you were complying with CDC guidance essentially, or federal health regulations in terms of trying to social distance and protect, the community at large. And so if those compliance with those measures prevented you from operating during your coverage period at the same levels as you had before February 15th, then there's that new safe harbor that we talked about, and that can allow you, we've got a lawnmower going by my house, I apologize, and that can allow you to use this form as well. The top of the form is some pretty straightforward information on here. It has, you're going to need your loan number, your loan amount, the distribution date, and all of those things I'm sure you can confirm with your lender. If you had an EIDL advance amount or got one after the fact, I know a lot of those showed up unexpectedly for people after the fact, that would be something you would put in here as well. There are two questions on here, and I think they can cause a lot of confusion, so that's why I'm highlighting them right now. They're asking for, and maybe Alexander, you're welcome to chime in here if you hear something from the lender side, but these questions are not your FTE questions. These are different questions. These are statistical questions that they're trying to gather so that they can have some statistics to share with the broader public, essentially, is my understanding of that. I could be wrong, and these are head counts. And so don't get caught up on these and getting scared, in my opinion, on answering these so much. These are not your FTE questions. Jump in if I'm wrong there, Alexander. Also, you'll need to know your payroll schedule as well. Go ahead.
Yeah, that's our understanding as well. And one thing to note, just generally on this new form, is to Mark's point at the beginning, this is something that's still developing for the SBA. They're still determining some of the interpretation of how we need to apply this. And so we'll continue to work with everybody, and I know that ASAP will do the same, and I'm sure Brad will do the same, to keep everybody updated as the SBA, because they're building this boat as they're sailing the boat. they'll continue to provide us with further updates, right? So, Mark, your understanding is exactly the same as ours at this point, and we're just continually touching base with the SBA to ensure that that stays the same and that understanding remains the same.
That's a good point. I mean, from different sources, we're hearing that they could be releasing tonight and into next week. Hopefully, all these kind of gray areas that we're going to probably talk about at the end will hopefully get resolved. Moving on through the form here, you'll need to input your covered period and your alternative payroll covered period in here. Your covered period is now can be up to 168 days and not 56 days is the 8 weeks versus 24 weeks in there. It again is your option of selecting either or. I know there's a lot of people going, well, I can't maintain FTEs for 24 weeks like they were before, so I'm going to stick to my 8 weeks and things like that. So it's still an option, as we said, for the majority of borrowers, prior to June 5th borrowers, that is. And then you have the alternative payroll covered period. The alternative payroll covered period, when it was first released, everyone interpreted it could apply to anyone. But I just want to point out on here that this is for borrowers with a biweekly, every 2-week payroll schedule or more frequent. And that's so essentially, if you pay on the 15th and 30th and you're a semi-monthly payroll schedule, you cannot use the alternative payroll covered period from our interpretation at this time based on the application itself or the instructions here. So pointing that out. The forgiveness amount calculation, and sorry again for the landscaping. The forgiveness amount calculation is much more simplified. This is really the questions, the 4 data points that you'll need to complete, and that is your payroll costs. So your expense tracking needs to be from your Excel files, from all the payroll reports we're sending you or other people are sending you. That's the #1 number on here. Then your any business, if you got any line 2 items on here, if you have any rent, lease payments, that again, that would be your number compiled in there, and then utility payments. Much more clean, simplified questionnaire. And then line 5 is a total of 1 through 4. 6 is your loan amount again, and then 7 is assuring that you spent 60% on payroll cost. And that's how you would arrive at your line 8 forgiveness amount. Important though are all the page 2 certifications on this EZ form. You'll want to read through these. Feel free if you feel you need to bring in your lawyer or accountant or anybody to consult you on that. If you don't feel comfortable on these, I know people are, anytime fine print is presented to them, unless it's, in your app, signing away your privacy to Apple or someone, we usually like to read over these for business decisions quite closely. So please do. I'm not going to tell you which of these do or do not apply to you, but they're important. And so we're not going to cover them all right here, except for this next page I want to focus on. At the bottom of page 2 certifications are 2 big items. One is, let me slow down, catch my breath here. You must certify by initialing at least one of the following 2 items. And the first one is the borrower did not reduce the number of employees or average paid hours of employees between January 1st and the end of the cover period, other than any reductions, as it says here, from the inability to rehire people. So that's one statement. The second one is the one that I've been focusing quite a bit of my attention on, because I feel like it can give the greatest relief to so many employers that feel trapped in their inability to open up their restaurant or open up their operations. I know even the landscaping firms that have the gardening stores, they're going to great lengths to keep people separated and reduce staffs. And even the construction crews are having to go to different lengths because of compliance with trying to separate people. So the second one really touches base on this, the borrower was unable to operate between February 15th and the end of the cover period at the same level of business activity as prior to February 15th due to compliance with the requirements established or guidance issued between March 1st and December 31st by these organizations. Read through them. I've downloaded the CDC one right now. Read through them and see how those you may have been complying with these things unknowingly because you just started doing things you heard on TV, didn't really know where they came from. Maybe it was the Restaurant Association or another trade group saying this is what's in your best interest. But most of those things came from guidance from the CDC, for instance, or OSHA or someone like that. So I would suggest everyone, and we can provide links to some of that guidance, so you start understanding, does this affect me? Is this something I can take advantage of? And we'll be trying to understand better what you need to provide to your lender to substantiate that. Here is the documents that the form is asking that you submit with your loan forgiveness 2-page application to your lender. And Alexander can elaborate here. I know they're still looking at the, all of these are suggested forms. Some of these don't really make a lot of sense necessarily because the payroll, we keep harping on the fact that we'll be happy to provide 941s for the entire second quarter, but they don't relate to a 24 or 8 week period. So I'm not sure the value of that one. But
yeah, I mean, something like the 940, you'd pretty much have to have received the loan at the very end of April and apply for forgiveness at the very end of June, and we would then take 2/3. That's an option. Yeah. But the things that we look for, bank account statements are valuable for us. Tax statements, to Mark's point, a little less valuable just because you can't parse out those 8-week or 24-week pieces. Even individual checks, right? You might write a check to your utility company, water, sewer, et cetera. Those are options as well. Most of the payroll providers will have some sort of form, whether it's Xero or QuickBooks or what have you. They're all thinking about okay, what's my covered period? So those will tend to be pretty reliable as well. The less the data can be manipulated, like in Excel, the more preferable it is, right? And the more comfortable any lender will be to interact with that data. Just because a bank statement, there are penalties if the bank themselves is producing poor statements. A check, there are penalties if you're writing a flawed check. Same reason why they took on the inbound side 940s and 941s. There's a legal penalty if you are being deceitful or cagey on the 940 or 941, and so they tended to prefer those kinds of documents. That doesn't mean it's the only way, and I would encourage you guys to work with the lender that you have, because each business's experience and systems are going to be very different.
And to his point, from our payroll perspective, we are working on kind of a summary report. The setup for that is kind of intense, and so we're kind of custom to each borrower because you have to match it to their coverage period a little bit. But that is something that we can work with you on a little bit there as well if you needed a PDF version of that. But we've been telling people to be ready to supply check registers showing payments for each of your payrolls in the covered period, and maybe producing a some sort of cover sheet that then would summarize the totals from those check registers. And then we also have a PPP applicable cost report that we've been producing with each payroll for the last hopefully 8 weeks or longer now. And then are you going to ask for copies of leases, I'm assuming, or is that on here, or what do you?
Generally, the rule is the more documentation, the better, right? Your lender will always appreciate more information. I think that the biggest thing is the bank statement. Leases are valuable, right? It lets us confirm, okay, that is the lease that they actually paid, et cetera. But the bank statements, the checks, those are the kinds of things that are the more important. Your lender, most lenders, with some exceptions, most lenders will say, the more you give me, the better, because it's another piece of information that will get them more comfortable with sort of saying, yes, this loan should be forgiven. But also part of it is it just lets them be able to have that documentation if, say, for example, they were to be audited, right? The bank were to be audited on their PPP loan practices, they'd be able to say, oh, we have additional documentation. So we always encourage our borrowers, the more documentation you can provide, the better, the easier it's going to be for forgiveness.
Is the forgiveness decision being put on you, is it created some hesitancy for lenders in general, not just your bank, but I mean, is that the issue with the lender community, is trying to assure that getting that information from SBA, understanding what is our role here and where do we cover everything correctly? Is that a big issue, or is that kind of a perceived issue?
Yeah, I think it's mostly a perceived issue. There's no question bankers are inherently more cautious, right? But the program itself provides pretty strong protections to the banks. And so really it's just, the biggest part is about making sure to do right by our customers. You know, if we don't give them complete information or provide them forgiveness or lack of forgiveness in a way that is detrimental, that's what we want to avoid at all costs. And so it's more about our reputational risk with the customer as opposed to our regulatory risk with the SBA or the Treasury or our federal regulator.
Okay. Moving on here, these are the documents that they are saying you should have in your files. You're not required to submit them to your lender unless requested, I'm presuming. And you should keep them in your files for up to 6 years after the date of the loan's forgiveness. So this is going to be a packet that we've been telling people, you want to keep everything together, probably scan it in, keep a double copy of it so it doesn't get corrupted, and you have it for 6 years in case it's called upon. But most of the focus is going to be on loans over $2 million. Is that what we're hearing? Is that correct?
Yeah, the Treasury has said that over $2 million, they're expecting to audit every single one. In personal conversations with some of the people at the SBA, they're a little bit skeptical about that, even though the number that's been sort of mentioned is sort of a spot check of loans between $350 and $2 million. I wouldn't be surprised if you'd see the occasional spot check for numbers below $2 million. I think the priority will be the above $2 million, based on some of the press that came out around companies like Shake Shack. But in private conversations with the SBA, they've said, that this is a pretty significant risk for us to be able to try and get to every single loan. There are only 2,300 SBA employees, of which of those, there are probably only a small handful of them that are familiar with the audit specialty. So I think you could expect that audit's going to be few and far between. You just don't want to get caught in that situation where that's a risk.
Okay. And a couple of things on here to point out. In here, it talks about documentation to keep on the job offers. The second one for employees that refuse to return to work. So it kind of spells out a little bit, it's of what written requests or voluntary resignations, things like that. Also on here, it will talk about documents to maintain in your files if you're going to choose that health and safety one. I think that's the 4th paragraph on here. Not going to go through it with you right now, but those are where you want to read through a little bit as well to glean some information. Kind of some of the remaining concerns and questions. This is where I'm going to bring Brad in. I put some answers on here previously, but let's see if Brad wants to talk about any of these at all. Can an employer choose a period in between 8 and 24 weeks as their coverage period? Do you have any thoughts on that, Brad? Or?
Yeah, I think I agree with your answer there. Yeah, you either choose the 8-week period or the 24-week period, whichever works best. And I think people really need to think through that. On one hand, again, these rules are relatively new. And so I think one thing people need to think about, the 24-week period in some ways is great because it gives you more time to spend that money. But can you also, I think you mentioned this earlier, Mark, can you maintain your FTEs during that 24-week period? And so some people, the 8-week period may work better. And I think that's where you really got to sit down with both, maybe your banker, if they're willing to do that with you, but certainly your payroll company and your CPA to really analyze how that's going to be. because it's going to vary from business to business.
Yeah. The reason I said maybe on here kind of, or possibly, is to point out the safe harbor provisions to everyone. If you qualify for one of those, and then essentially the pressure on the 24 weeks is not as great, because
Right.
you've maintained the salary and wages comparison just fine. It's the only thing in your way is that FTE issue. So in a sense, if you're confident in your FTE maintenance or ability there, then you're more likely to jump into that 24 weeks. The other things are. Go ahead.
Oh, sorry. The other thing that I was going to mention is this is an area that we'll be following up pretty aggressively with the SBA on, because a lot of our customers, sometimes 8 weeks is too short, 24 weeks seems too long, especially if there's an FTE requirement. So we definitely want to find out, is it possible to get 10 weeks, 12 weeks, 14 weeks? When can you start to apply? That's been one of the big questions for us, and I think a lot of different interpretations that we've seen out there. So the SBA hasn't come out with a final piece. So that's one area that I know that Mark and Brad and I will all work on, sort of getting an answer and bringing it back to the folks in this webinar.
Mm-hmm. I'm going to jump down here. The one that's I'm still a little bit unclear on what the process is the how should employers perform the salary hourly wage comparison. And from the instructions, the only thing on here, it says this document must include payroll records that list each employee separately and show the amounts paid to each during the first quarter, and then amounts to the employees during the other period. On the 11-page forgiveness application, there was an extensive step-by-step kind of process to this. I've been trying to dumb it down for people so that they think of it as I didn't cut anybody's base compensation. I didn't cut anybody's hourly rate or salary, and I think that's where I'm a little uneasy and hoping that the Treasury can give some other examples of that. Because I know a lot of people were saying, I've cut, my employees are working less. They're not going to equal the same amount of earnings because they're hourly employees and they're working less. And so in a sense, getting double penalized from that FTE comparison, if that's the case, or is it just the base component of their pay, which is an hourly rate on an annualized basis? And I didn't know if Brad or anybody wanted to address that or any other things here we're pointing out.
Well, I think they're not penalized twice, Mark. I think that if somebody's hours are reduced and you have to go through those calculations, that you look at that first, and then if their pay is reduced as a result of the hours being reduced, you're not penalized a second time for that. And then, of course, then you have the safe harbors that may pull you out of all of that sort of stuff. So again, and what's different now with this EZ application is it almost feels like you don't have to do that kind of stuff as long as you can prove that there was no reduction in pay and hours. And I think that document is not a required document, but you have to have it on hand where you compare each employee, during the two different periods. But if you have to use the bigger application, then again, it's where you need to sit down with your accountant and really work through those numbers.
Okay.
I don't know if I clarified that, but it's.
No, I mean, you're getting, I think it's confusing still as every time I've seen it written, I kind of, in my mind, I come to even myself a different answer on that. And it's just one item I'm still looking, it's a remaining concern I have. I think in a simple-minded manner, I'm saying, hey, I didn't cut anybody's pay. I'm easy. I can check it and certify that box without fear because I know what I did. But what's the mechanics behind it that they're wanting us to prove out is kind of what I'm interested in, if audited or if required to show that documentation in the long form.
Right.
The Schedule C filers, do you have any thoughts on that, Brad?
Yeah, so, interesting to note, if somebody chooses, I think you've got it down here, if you could, towards the bottom of the screen there, if somebody, we have the limitations in place for how much you can pay somebody based on 100,000, and those have been increased if they're using a 24-week period to a number around 45,000, I think. But that's not the case for self-employed individuals. It's still limited to either if you're using an 8-week period, it's 8 divided by 52 times either 100,000. It's the lesser of that, or your Schedule C income. If you're using 24 weeks, then it's the lesser of 2.5 months equivalent of your Schedule C income, or 20,833. And so, and the reason for that is, and it's actually inside the IFR, Congress did not want self-employed people to get a windfall from this. And what they were worried about is that if a self-employed person maybe had an employer or two before this, and they got their loan based on those salaries, and then they let go of those employees, now all of a sudden they could increase their owner's compensation by a lot more, and they didn't want that to happen. So they have kept it to those original amounts for self-employed people. And I think that's included on your slide down here. I don't know if you could scoot that up a little bit so you can see the rest of it, but.
Oh, well, maybe not. Well, that was the last slide on here, but yeah, we can share that in detail. Diana, do you want to jump on here and help moderate the QA, or Tracy, one of y'all?
I am here. I can help with that. So let's start with the popular question that the most popular question so far is, if we use our funds after 10 to 12 weeks, can we apply for forgiveness as soon as 100% of funds are used per the requirements? Or do we have to wait for 24 weeks to apply for forgiveness? And you guys did mention that, but let's touch on that again, just to reiterate that that's not clear. Or I guess I just answered it.
Yeah, you kind of answered it, but essentially, if you can qualify for one of those safe harbor provisions and do not have to meet the FTE requirements, then essentially you can go into those gray, you can go to an in-between period. Technically, your coverage period would still be 24 weeks, and for the top of the form in that one section, but since you've used the funds, you can move ahead since you're in those safe harbors on FTEs.
Yeah, I agree with that, Mark. I think that I read something today that I tried to find it again, I couldn't, so I'll circle back, but I think you can apply before that 24-week period is up. What I would say though is I think people need to wait a little bit, because there may be more changes coming and even more simplification. I've read that there's a couple of bills floating around out there that would simplify this application even more to even one page. And so I think there's still a push for that. And so people might want to wait a little bit longer, because again, as I think, as Alex mentioned before, we're selling a boat as it's being made. The way I've mentioned it before is, it's like trying to push an elephant through a garden hose. He doesn't want to go. He's trying to interpret tax laws and turn those into SBA and banking laws along the way. And so that's what we're dealing with here, and it's going to continue to change. And so having some patience, I think, is a good idea. There's still money out there too. And so for folks that are on the phone that haven't applied for one of these loans, that have been uncertain because of all of the changes and some of the things before, I think now there's still time to do that before June 30th. And I think it's better than it was before, and people ought to think about that for sure. Just thought I'd throw that in.
Yeah, and that's actually, Brad, a good point. I noticed one of the questions was, can we apply for an additional loan? I think from Jenny Russell. It is possible to apply for an additional loan, but not for the same entity, right? So if you need to revise your amount or something like that, we'd encourage you to contact your lender. That's going to end up being a relationship and a thing that the lender has to work out with SBA. You definitely can apply for a new loan under the same entity. They only allow one PPP loan, but if you have a an entity out there that still hasn't gotten one, or an independent contractor that hasn't received one, there is still time and funds available. We processed a loan just yesterday, small, but there are a handful of folks who are still kind of trickling in very, very slowly.
I'd like to interject.
Someone said they couldn't. Let me just, that triggered a question from my side. When's the last day you anticipate taking loan applications on PPP for people that haven't received them yet?
Yeah, for our specific bank, we've pretty much stopped taking loans from anybody who's not a customer. Part of that is that the program at this point has been right-sized to the point where anybody who's coming in on this tail end, they've either don't quite have everything all together, or they've had problems with another bank, right? They've gotten jerked around by Wells Fargo or Chase for 3 or 4 weeks, and they still don't have money in their account. The last one, and this is the reason why we've sort of closed it down a little bit, is there are some nefarious actors who are trying to get in. We haven't run into anybody yet, but that's one of the warnings that we've received from the SBA and our own regulators is if you haven't received a loan up until this point, it was because you really did a poor job or were sort of taken advantage of in a previous round. I think banks are generally cautious. We've been permissive, but we'll definitely take more time to look at that application because, especially if it's somebody that we don't know, we'll want to be super careful.
Yeah, I mean, I know there may be some nonprofits. Are you taking, Alexander, loans from people within your bank's footprint, or just contact you guys and you have a method, or?
Yeah, just contact us. Yeah, and my email is just aprice@csbcolorado.com, and I'll have ASAP include that in it. Feel free to reach out. Like I said, we're taking them, but we've just been much slower in accepting them and much more cautious. And that being said, you're going to be one of only a handful of applicants now, so it's not going to be like the beginning of PPP when there were 40 a day, right? And you were just trying to churn and burn as quickly as you could to try and help folks. So it will be a little bit easier, and we work to be very responsive with a yes or a no. To be candid, the answer isn't always yes, but almost always it's yes.
There's a question on here about people that had retired and how those impact them. The stipulations in there, if anybody that's retired or voluntarily resigned within the period, those don't count against you. Even in the long form that was released on May 15th, there was a methodology for excluding those impacts onto your FTE counts. There was a little confusion about the mechanics behind how that math was supposed to work on that Schedule A worksheet with those FTE numbers, so I don't want to necessarily answer that, but there is a methodology to where those shouldn't impact you. And the fact that you replaced them with, or one of them at least, then that one of them would actually even work in your benefit on top of those two not counting against you. To answer that question, just see if I can get another one of these answered. How long do we need to keep employees if we elect the 24 weeks but spend the entire loan proceeds in 10 weeks? That's kind of getting to what we were talking about, the same question earlier in terms of, right now they haven't really said, but we think if you choose the 24 weeks period, then your coverage period for maintaining FTEs, unless they come out with some statement, hopefully they will, would be you have to maintain your FTEs for the entire coverage period, which is 24 weeks. So that's the one that a lot of people are focused on that one. You're not alone. But if you can qualify for that safe harbor on, say, social distancing, I'm a restaurant and I was impacted, therefore you don't have to maintain FTEs, then essentially you could choose not, indirectly 10 weeks as your period there. Anything about the ETRC? Is that the, what is ETRC? Anybody remember?
Employee retention credit. And as far as we know, you can't use that still with PPP.
That's also my understanding.
Right. Agree.
Oh yeah, that was that first program I forgot to ever look into after PPP.
Yeah. PPP just came so fast that I think it slipped through the cracks for a lot of folks.
Yeah. I think that is the one you can do both.
Go ahead.
Yeah, I did notice a couple of questions. So to the point about retirement, but also there's a note from Tiffany Collender. Will we have to reduce our forgiveness amount if an employee voluntarily asks to reduce their hours from 40 to 20? In every case, right, what you want to make sure is just document, right? So if the goal is not to penalize people for somebody retiring, or for somebody voluntarily asking to reduce their hours. That's fine. You just want to make sure that there's some sort of documentation of a letter of resignation or retirement or some sort of formal way that they've made that request, so that you can then go to your bank and the bank can certify, yes, that all makes sense. Your FTE decline, if you are subject to the FTE requirements, is within the bounds of what's allowed. So the key thing is, I would say, if you take one thing away, it's document. I mean, you can't over document in these situations. It can be annoying for sure, but that's even the case. We have a customer, a client who, they're concerned. They feel like they have to fire some folks for cause. The goal of the law is not to not allow that, right? You're still supposed to be able to operate your business. You just need to document, whereas in an at-will environment, you might never have written it down. In this case, you definitely want to work to document it. The point is that you're not doing layoffs.
Yeah. And then it is written in there for cause issues and some of the documentation. So, one thing I don't want to skip over, if this ETRC question was related to the tax deferral, the Social Security tax deferral portion of ETRC, that is now applicable to all. I just want to make sure I didn't skip over that too quickly. And then there was a question on here that I thought was a good question in terms of I have two entities, and this is more of a loan officer question, I guess. I have two entities. I applied for the loan for my first entity, which has 20 employees. I forgot what, and then I have another entity with just myself, one employee in it. Can I apply for another loan under that other entity? It's per entity, right? So they could do two loans, right?
That's right. It's per entity. Exactly right.
Yeah.
The one question that we have not run across, and this might matter to Mark, is what happens if you're an employee of both entities and the amounts that you make in total sum up to more than 100,000. That's a question that I don't think, it's a little corner case, but yes, you can apply for PPP loan per entity.
Okay. Anything on here, Tracy, you want us to touch upon?
Let's see. One person, just because it was upvoted, is there a maximum loan amount to use the EZ form? And I can answer this if you want me to.
Feel free.
It does not appear that there is a maximum. It doesn't indicate that on the requirements, but there is a box to check whether or not to check if your loan amount is over $2 million.
Yeah.
Don't check that box.
Unless your loan is over $2 million.
Well, yeah, but I mean, I know my audience at least. I don't think we have any of this. All right.
Yeah.
Go ahead.
Well, I was just going to say, because that was Meg Seclaritas, and we would just, in Meg's case, reach out to the bank that you worked with, whoever that might be. In the end, right, it's going to be about, they are going to be, the federal government is going to be more cautious about big dollar amount loans and less cautious about small dollar amount loans. And part of it is just a function of how bad does the story look on a headline in a newspaper if the company got a loan. And that's one of the unfortunate things is that I think a lot of people follow the rules and still got skewered. Maybe the rules weren't correctly written, but nobody or few people tended to break the law to get these loans, but sometimes they were structured in a way that the headline on CNN still looked bad, regardless of how legal or forthright people were.
So another
Go ahead.
one of the pre-submitted questions that I just want to make sure we get to, and also just so everyone knows, we do have this webinar scheduled to go through 3:30. So as long as we have participants and our panelists are willing to keep answering questions, we'll keep going. And as I've mentioned before too, we also have working on a comprehensive FAQ document that will capture all these answers as well. It's just been a monumental task with all the changes. So but I should have that finalized next week. Anyway, this one question I thought was pretty good is there clarification about rent payments to any entity with the same ownership as the PPP company?
So if we own our space and the ownership owns the space, for instance, and they're paying rent to themselves, kind of question. I've seen that's totally. I mean, that's very common, quite frankly.
Oh.
Yeah,
but I'm looking at Alexander or Brad on that. I've been making that assumption.
I don't know that we have any real guidance on that. I'm actually looking at the American Institute of CPAs, AICPA, has their own FAQs, and I'm looking at one right now, and they say that question has not been specifically addressed. It's been my interpretation that rent would be okay. Again, though, as long as you have a lease in place to document that before February 20th.
15th, I think.
Yeah. So that's my interpretation, but I don't think we have any real clarification on it, unless Alex says otherwise.
That's also my understanding. Yeah, and to Brad's point, you have to have that lease in place. I believe it's February 15th. I think I heard Diana say, or maybe it was.
Yeah.
Maybe
it's February 15th.
But yeah. February 15th, yeah. But it like Mark said, it's a pretty standard setup, right, for a business to own their own property and pay to the rental organization, or even to have two entities where the ownership group provides leasing space to this separate business that they might have. What we found is that the SBA generally has relied on rationality in most of these circumstances, and when that has missed sometimes, like they kind of missed on co-ops, for example, with enough conversation, they kind of came around to it, right? With enough conversations with congressional delegations, et cetera, they came around to it and understood the practicality. You just had to make sure to present it. So I don't see why it wouldn't be covered.
We're also getting a number of questions related to PPP and EIDL. And the SBA just is starting to accept applications again for EIDL and the emergency advance. So any clarification you guys can provide about how those two programs work together?
Yeah, so I see one question here that they applied for an EIDL about the same time as PPP. EIDL approved after PPP approved. Does EIDL have to be paid back? Also, I applied for EIDL on loan, hit the wrong button before copying, so I have no record of what the EIDL loan number is. How do I get that? So there's two pieces to the EIDL, so let's make sure that we distinguish between those. When that first came out, there were the EIDL grants, and at first that was going to be up to $10,000 per business, and then because there was so much request for that, they kind of came back in the back end and said, well, we're going to limit it to $1,000 per employee. And I think what happened to a lot of my clients is they never heard anything again. And all of a sudden they started getting random $1,000 amounts deposited into their bank account. So if they just had themselves, they got $1,000. If they had 5 employees, they got $5,000, but there was really no explanation of what it was. That was the EIDL grant. That EIDL grant does not have to be paid back. However, if you also got a PPP loan, that EIDL grant will be figured into as part of the PPP loan forgiveness. Now, in addition to that, some people have actually now gone on and gotten a EIDL loan as well. And that EIDL loan will become a real loan and will have to be paid back. And I forget the terms. Alex probably knows. I think it's 3.75 rate, something like that. But those,
yeah, 2.75 if you're a nonprofit.
Yeah, so those will have to be paid back.
But it's a very long, or it's a longer period of time, right? It's more than the 5 years. My understanding, and we haven't done much in the way of EIDL except for converting EIDL loans into PPP forgiveness. My understanding is that the EIDL loan max is you can get up to $2 million. To get an actual EIDL loan, I believe there is some commitment of collateral that's required though. So, you know, don't think of it as the free money from PPP. It is definitely a true loan, and collateral is required. It can't be unsecured. The $10,000 from EIDL was designed as a grant, as a way to get $10,000 to basically every business in America right as the crisis hit. It really fell short of that goal because, you know, people applied and they just got inundated and they couldn't operationally get that money out fast enough. And I do think that was one of the reasons why the PPP program ended up getting put in place. It was essentially using another system outside of unemployment insurance to push money into the economy. And that was to use bankers who were used to identifying payrolls, et cetera, as a way to provide kind of a de facto unemployment insurance. That was the original vision articulated by the SBA to the banks about why the PPP program was being built. It's now been modified slightly, and I know Mark and I have had this conversation to be more business friendly, and not as explicitly kind of unemployment insurance replacement or supplement.
And the EIDL loans all happen through the SBA portal, SBA website, not through your banker. And so for the person that lost a number, I think the only thing they can do is go back to that SBA page and maybe type in their name and maybe they can find it that way.
Yeah.
Maybe we should pose that to Steve White as a follow-up, Tracy, over at Denver SBA.
Actually, I do have the numbers or information, contact information for people to call for EIDL. I'll just have to dig it up, but I will definitely be sure to include that when we send out resources.
Okay. Thank you.
Yeah, and I think this question is being asked also again, just the clarification on payroll costs and earned and paid during the covered period. And there's been some back and forth with that whole and or, paid and or incurred. And if we can shed some light on that. So, and I can ask the direct question if you prefer.
Yeah, so in general, it is for costs that are paid during the covered period. Having said that, they've broadened it a little bit to include if you have, for instance, if your last pay period, if you have amounts that are incurred during the covered period, your loan period, and your payroll falls outside of that, outside of the, say, the 8-week period, then you can go ahead and pay that even though it falls after the date, as long as it falls within your normal payroll period. So again, you can include payroll that's paid after your 8-week period, as long as it's paid during your normal payroll process, and part of it was included during that 8-week period. Likewise, I believe on the front end, and Alex can correct me if I'm wrong, I think on the front end, if you have a payroll period that started before your 8-week period, and even before you got the loan proceeds, the way that I read it and interpret it is, as long as that's paid during the covered period, that would also count. So in other words, you don't have to try and prorate those payrolls.
I would vote yes for that, but I don't. We've been playing conservative just to on that and telling people to prepare to prorate. Just I haven't seen it answered clearly enough, like the direction you have given there, Brad. I have on the back end. That I think that's clear on the back end, but the front end is something I'd be curious if something comes out to support that more. But it would sure help with the processing of these from a headache standpoint for everybody, if that was the case.
Yeah. Yeah, I agree. Yeah, we've taken more Mark's kind of take, being bankers, being a little bit more conservative for sure. But I think what Brad has articulated is exactly how it should be. It's just a question of practically, is that how they're allowing it to work? So that's an area that we've been following up with the SBA on, because they're not entirely clear as well. Because practically that should be the case, right? You should, if the difference is 2 days after versus 2 days before, I mean, is that really a meaningful difference? It's really not. One thing that I did think is also worthwhile to mention is that with this new document coming out, and despite the previous document that was 11 pages, the SBA and the Treasury have still not given banks actual guidance on how to provide this forgiveness. So keep that. I know. Imagine that. So just keep that in mind when you're working with your financial institution. They're going to work on your behalf, and this is true for our customers, but I'm sure most banks will be doing the same thing. We're your advocates with the SBA and with the Treasury, and we're working to get the answers. But right now, we haven't been given clear answers or even a clear system on how we apply for this forgiveness on your behalf. We do know, however, that your banker, the same person that you applied for the PPP loan with in the first place, that's the same person that you go back to and the same person that you'll take the application to. They just may not be able to provide you with forgiveness right away. And to Brad's point around preaching patience, that is one area where the banking system hasn't yet been given guidance on how to actually provide this forgiveness. We know generally what's going to be required, bank statements, checks, like we've talked about, but we don't know specifically how the bank is formally going to apply for forgiveness on your behalf.
As we were talking, quick reminder that the tax season has been pushed into July, so I'm sure Brad would like everyone to be very patient and feel free to wait for more guidance before confirming how to get that advice from your tax preparer on PPP loan forgiveness. Yeah, no, but in reality, the interest is going to be forgiven based on the date of application for forgiveness. So there's no pressure from a financial standpoint for lenders, for borrowers rather, to wait. Correct? I mean, Alexander. There's no rush. It's except for just wanting to get it behind them because we all want PPP to be over.
Yeah. Yeah, and there's an expectation that there's going to be, especially as guidance takes longer and longer to come out, there's going to be more and more of a backlog of the people who started to get loans in early April, mid-April, late April. Those folks will have hit their 8 weeks and be ready for forgiveness or want to take forgiveness, et cetera. And the longer it takes for SBA and Treasury to give us guidance, the more likely it is that there's going to be a big tsunami, and that will slow down the processing thing. So, you do want to work to get in line, and there's no question. The challenge is just going to be there's a risk, of course, that it's going to be as frustrating with some banks as at the beginning. I think you're going to see a lot more responsiveness from the community bank side, because there's going to be some nimbleness to be able to respond to all the different new rules that SBA is coming out with. If you're with a big bank, you're more likely to have to deal with one large system with some phone bank. That's why we're big fans of community banks, but it's just the nature of the situation.
Hey, Mark.
I'm going to try to jump on this. Go ahead.
I just wanted to, going back to that, the paid versus earned. I just want to clarify there. That is kind of my interpretation, but it did come from the original forgiveness application and some of the language that they put in there. And part of that also comes from, being a CPA that is trained in tax law and paid attention to those ands and ors. So it is my interpretation. I'll throw that out there. But it feels like a pretty good one. But like we'll say, we have to wait and see for sure what they do.
Thanks for that. There's a question on here about business insurance payments being eligible under PPP, and that's a broad business insurance. I mean, it could be any type of insurance. The only insurance I've been focused on is group health insurance coverage. And when we had Steve White on one of our webinars a couple weeks back, he made that pretty broad in terms of you could even include employer health savings account contributions and maybe even some supplemental employer paid health insurance and maybe other employer paid employee benefit types. But business insurance in general, liability coverage or even workers' comp, we haven't been saying that's includable. Do either of y'all have a opinion on other types of business insurance and maybe the questioner can elaborate more?
Yeah, I don't think so. I don't think it falls under rent. I'm not sure, and it doesn't fall under utilities. I mean, those are the things that are spelled out are payroll, rent, utilities. So I'm not sure that would count.
Yeah, I think it would only count if it's the health insurance piece. If that's what she means by or by business insurance, excuse me.
Yeah, maybe transportation costs if it's an auto type thing. I mean, I'm stretching it there.
Yeah.
Okay.
Yeah, because it's like part of the utility.
I mean, they put transportation under utilities.
Right.
Okay. Can you use the loan to December 31st? 24 weeks, December 20. What am I missing here? So.
Yeah, I think it's the earlier of 24 weeks or December 31st. If I remember right.
Yep. And then just going back quickly to that, the non-payroll cost eligibility, someone also asked about internet monitoring expenses, like for hotel owners, if that's considered utility. And, again, it's one of those gray areas but it sounds to me that the Act gives lenders some freedom to interpret and apply or allow certain expenses. But I would think, and this is just from my layman perspective, that if people now have 24 weeks that to include all those other expenses, that they should be able to meet the forgiveness requirement just based on just regular utilities and other payments, because now you have 24 weeks to spend them, correct? Like, I don't know if we need to get fancy about all these other non-payroll costs and eligibility.
Yeah, I think for
if you're going to go.
Go ahead.
Go ahead.
I was going to say, I think for anybody that is, has been able to more or less maintain their payrolls, because remember the loan itself was based on 2.5 months of your average payroll. And so for folks that are able to maintain their payroll during this period, whether it's 8 weeks or 24 weeks, they should be able to get to those numbers pretty easily with their payroll and their rent. So I have a couple of clients that have not, because they don't want to deal with getting the utility bills and getting them to their bankers. They're focused on paying as much as they can with payroll, because we know in the beginning that was supposed to be 75%, now 60%, and then the rest rent, and then not even worrying about utility payments. So I would only do that if you really can't spend the money on the other stuff, because it's just going to make it easier on applying for forgiveness later with your bank.
What about Oh shoot, I lost track. Someone jump in. I forgot what I was going to say.
Well, Cynthia, she followed up asking, we have to carry general liability insurance and workers' comp insurance. It seemed like when these loans were first offered, legitimate business expenses were supposed to be allowable. And that was similarly our understanding, right? In the initial concept of the program, I do think that they've narrowed it down, and I bet Brad has a more specific answer of the types of insurance. But my understanding was it was primarily health insurance that was allowed to go under the payroll expense, legitimate payroll expense. Did liability insurance and workers' comp? Workers' comp was the one that I thought I wasn't sure on, but
No, I don't think so.
Okay. I mean, I see the logic behind calling workers' comp an employer payroll expense if they wanted to litigate that one out. But it's back to Brad's point. If you can get away from any of those on the gray area, try to. You don't want to be fighting the cause for everyone out there on workers' comp if you don't have to.
Hey, since I know we had one question that was that came in earlier on before the seminar started about, and we're talking about this right now about all these costs. And so the question is, we know that as long as you meet all the forgiveness rules, the loan is forgiven, and that is not taxable income. And then the IRS came out back in, I think, late April maybe, and said, well, that's fine. But guess what? The expenses that you pay with this money are now not going to be deductible. And so there's still some question out there as to what's going to happen with that. And so I just thought I'd address that real quick. That was not Congress's intent. So as soon as the IRS came out with that, I think it's notice 2020-32 or something like that. Several members from Congress said that that was not their intent and that was not correct. Again, the AICPA came out pretty strongly and said that that's not what this program was meant to do. And so as of to date, though, that notice does still stand. There was a Senate bill that was actually called the Small Business Expense Protection Act, I believe, that was introduced, I think, June 1st in the Senate. And then there is a House bill called the HEROES Act that passed the House, I think, mid-May, that's now in the Senate and being looked at. And it has provisions in there that would make those expenses deductible. The problem with the HEROES Act, though, is it includes a bunch of other stuff. As they make these laws, they try to throw in other things. And so I think it's going to take a while maybe for that one to be figured out. But again, there are some bills out there that would make those expenses deductible if paid by a PPP loan. But the answer is still not clear yet.
I just opened my email up and I'm getting photocopies of text messages from clients saying, here, is this documentation work for employee not showing up? And then from what I hear, it does work. If, that's what you really need to be after. I was pulling up my email because our industry has some lobbyists that have been updating us, and that is still being worked at. And one of the things under the HEROES Act, I think, is being read. I think I'll have to find out where it's the latest, but they're hoping to get that included. But if it doesn't, Brad, my question is there any tax advice in terms of one expense over another expense? I mean, treatment from a tax planning standpoint for the shareholders? I mean, would there be a case for looking at, which funds you want forgiven over value over one over the other, or are they all equal? Sorry for the hypothetical at the.
I don't think there'd be any difference. And I think I hope there's a pretty good chance that they'll change that rule, but we'll see. Yeah. There's a lot of pressure out there.
There is one
a quick question I'll
on,
answer. There is no cap on the payroll costs. You can use 100% for payroll.
Correct.
Yep.
Is guaranteed payment.
I would guess that's probably the easiest way for you to simplify your life is spend all your money on payroll. Whether you choose the 8 weeks or the 24 weeks, if you can show that you spent, 100% on payroll, your life's going to be a lot easier. Your banker's going to love you. Everybody's going to be happy.
How long do they have to fill out to apply for forgiveness? Is it 10 weeks after the end of their coverage period, or is it
10 months?
10 months after the end of the coverage period.
Yeah,
up
and
to
I
10
think
months.
People need to be aware too that the interest does accrue during that time. So you've been accruing interest since you received your loan, but that interest is forgivable. But just something to keep in mind as you extend or delay your application.
One of these questions is going to be really hard to answer online without a lot of context and consultation, so I'm just going to wait on that one. Guaranteed payments, how are those handled?
I'm not sure I understand the question. It says, should that now be recorded on payroll or overhead expense? I mean, so the guaranteed payments are, that's back to the kind of the owner's compensation, looking at, so we're talking about a partner and a partnership, and the amount that they can qualify, firsthand when they were getting the loan, the amount that they could qualify would have been looking at their Schedule K1, I believe it's line 14A, self-employed income, self-employed earned income. And so it's the equivalent of 2.5 months of that. And forgiveness, or your 2019 Schedule K1, line 14A, I believe. And forgiveness would be based on that same number. So I don't know if that answers the question or not, but that's how I would look at that. And Alex,
you want some you want some documentation of whatever the mechanism is that you take money out of the business, right? Is it a draw, et cetera? Coming into the program, a number of folks had a challenge just in did they take monthly draws, quarterly draws, annual draws? Some didn't take draws at all, and it was just all in their tax documentation, how much the value of the company increased, et cetera. Again, it does come down to documentation, and if necessary, we'd suggest that you take a draw for the quarter or for that period of time to demonstrate that is what you did, and that it also has to be consistent with what you submitted for, right? So if you bump up the number, eyebrows might be raised as well.
I'm looking at this again, and it's in context of the form EZ and where on the EZ form that would go, and it's possible that maybe that would force them into the longer forgiveness form and not qualify for the EZ. Is maybe the hurdle that they're running into here. I'm looking at the form. I haven't looked at it through that lens, that perspective yet. But that may be the reason they're struggling with how to use the EZ and where to record that guaranteed payments, because it may make them use the longer forgiveness form.
Because they're not allowed to technically put it in payroll, perhaps?
Perhaps. The questioner is a client of both of ours, Alexander, so we can follow up afterwards.
Okay.
I think it's. I think that's included in payroll costs.
Yeah.
I think that would be my interpretation for sure.
Yeah. So
or my inclination, maybe not my interpretation, my inclination.
If you look at the instructions, if you look at line 1, it talks about payroll costs, and the second part of that is owner's compensation, where it talks about self-employed and general partners. So that's page 2 of the instructions, almost towards the bottom.
Okay, great. That'll save some heartache there. Brad, do you want to talk about the ERTC program at all, and on this last question?
Not really.
Not on a Friday afternoon. Is it happy hour yet?
Oh my God, it's getting late, guys.
Like you, it's one I haven't focused on as much. My partner Pat Barrett he's done a lot more kind of analysis of that, and I've been more focused on some of this PPP stuff. But I've seen the question, and we'll get back to it.
I'm going through the chat in here. So reach out to your lenders. It's a good time to reach out to them. I know some of them that we work with First Southwest down there in Durango was going to roll out a online product for the forgiveness application. They pulled it back, and now they're waiting to, I don't want to speak for them, though they may still go forward with that online application. Reach out to your bankers, find out if they're going to accept the PDF or if they're going to require an online form for this. You know, if it was a normal banking environment, they may have you come in and do it all in person, but because we're in COVID precautions, they may still want to go that online route for other reasons. So that'll be up to each lender. I don't know if there's anything else in here. Anybody else have any questions? But
well, there's probably just a few of the pre-submitted questions. Just want to make sure that we address those. One that's a popular one, and I think we hit it at the beginning, was any direction on PPP loan forgiveness for sole proprietors. I mean, basically they can use the EZ form, and then their allowable payroll cost limit is based on either if they choose the 24-week period or the 8-week period. And then is there anything else that is special or applicable to them?
Nothing in particular. You know, you're going to have a handful of sole proprietors who will have received, if they make more than $100,000, who will have been able to, and some will have received the $20,833. They'll have to do if they want full forgiveness, they'll have to do the 24-week period. Why that came down that way, I'm not sure. I mean, it obviously was a function of the fact that it's an 8-week period, but the loan covers 10 weeks. I mean, the challenge oftentimes for sole proprietors is one of documentation, you know, and how they keep their books, et cetera. That's where, again, right, we'd recommend do as much as you can with the payroll piece. It's the most straightforward piece. It'll simplify your life. I think apart from that, you know, checks, bank statements, those kinds of things are useful to leverage as well. But I don't think there's anything particularly different. I don't know, Brad, if you think, or Mark, is there anything especially different?
No, again, you know, their owner's compensation is limited to their 2019 Schedule C. So that's how they applied for the loan. Their forgiveness is based on the same number. They are limited to what they can take as owner's compensation. If they can't get there with that, hopefully they've got some rent of some sort that they can fill out the rest of it with.
Mm-hmm.
yeah, I mean, if you have any people listening in, and if you know anybody in the community, we're really hopeful that people are still looking to apply. There's a lot of those sole proprietors, independent contractors. Frankly, we're probably misclassified as independent contractors and should have been employees. Man, don't get left behind. If you can apply for a PPP loan, get out there and try to do it. Also, there's some nonprofits that thought they weren't eligible because they weren't a for-profit entity. You know, if you're on a board or involved with one, you know, stick a bug in their ear and make sure that they try to get something in before it's out. One question, Tracy, you'll ask us some more questions, but Alexander, this is good out of the blue for you, but the Main Street lending program that was part of the CARES Act, correct? Or
Yep.
Are y'all going to be involved in that? Is your bank going to be involved in that, or what do y'all?
So so at least how the Main Street program was initially crafted, it was for what turned out to be very large companies, right? I think it was like 500 plus. You know, that's just not our community, and so we could only think of maybe one or two different customers who could use it. I think they're reformulating the Main Street program, and there's more information sort of forthcoming. We're paying attention to it closely. At this point, we really don't see it being useful for our communities because there's not enough scale for it to make sense, for the terms to make sense, for the dollar amounts to make sense. But our understanding is that they're continuing to work through that because I think there's a general recognition in Congress that program probably wasn't going to help the small businesses the way I think, however they had envisioned it initially was going to work. So, always feel free to reach out to us. We're paying close attention to all these programs. It's just a question of whether or not there's something that's useful for our communities.
Thank you. Okay, I think we've answered most of the submitted questions. And then just in the Q&A, there's still one. This was the follow-up to the retirement question, but I think you guys answered that.
That one's a little hard to answer without specifics, but I mean, I just feel like from the good-natured manner that this person asked this question in terms of that I would assume that there's got to be a mechanism here. I mean, you've documented pretty well that you've gone through this extensive HR process for this job. So essentially, they were not eligible for the same job. They could have applied for the new job and they didn't get it. So I mean, there's got to be some way in there that you could justify that person shouldn't be impacting you negatively on your FTE count comparisons. I mean, the next question is documenting the headcount test. It's really the FTE count test, if that's the one I'm understanding. So if you still are subject to the FTE, if you're not the safe harbor to get out of the FTE because of social distancing measures, yes, is it required to submit? Let me go back to those. Is it listed there as documentation you need to submit or documentation you need to maintain? It'll be one of the two. You'll have to maintain it if you don't have to submit it, is my understanding. And it sounds like it's documentation that you should maintain for 6 years, but not be required to submit necessarily unless called upon by your lender. And we're wow. Everyone's having fun. We still have people.
We've got 59 people, and I believe we've gotten all of the questions. If I missed your question, I apologize. Please feel free to type it in the Q&A, or we can wrap up.
Maybe they're not paying attention. They've moved on. They've left it running.
They're getting that adult beverage.
I guess I'll add something that maybe I shouldn't do this right at the very end, but for Mark and I were talking about this a little bit beforehand. We shared some emails. So for S Corp owners out there, this latest guidance came out and said that health insurance for an S Corp owner is not included as part of the forgiveness. But then it goes on to say because it's already included in compensation. So I'm not quite sure what that means, but if you're an S Corp owner and you have health insurance, sit down with your CPA and really look hard at that language because it makes you think that it's not included, but by virtue of it being included in compensation, I think it may be included. Mm-hmm. Unless you're over 100.
We had that question. Yeah, we had that question in the webinar before, and I think Steve White's broad interpretation was that the language originally said group health care or healthcare premium or what have you. And that's why a lot of S Corps and sole proprietors and stuff, they weren't necessarily on a group plan. They were just one person.
Right.
And I think that's something that probably got brought up. So I'd agree. Talk to your CPA because. Well,
and from a payroll perspective, normally for those S Corps, we get that information in December and book it. It's a non-tax item. Sometimes we'll book it in April. You know that. Oops, they forgot to give it to us. So normally we wouldn't even show that in the payroll reports that they would be providing until that December payroll report. So. If need be, I'm sure I'll instruct our team. We're happy to add 8 weeks of equivalent health insurance costs as a memo item onto the payroll report so that you can provide those to their lenders if required. There are more FAQs coming out because I remember early one of the webinars, we specifically said, no, payroll costs are defined as this. The health insurance is over here in this section of the 11-page forgiveness application. Those are totally different items. You're fine, and now it's going 180 on that. So maybe we'll go 180 the same way.
That's the elephant through the garden hose. Trying to interpret tax law and banking law, and there's twists and turns in the hose. Hopefully we'll get him out here for too long.
Yeah. Let's see, we can go a couple more minutes here before we're going to go to 3:30. Lenders, you know, try to, like I said, just if you're still out there, reach out to your lenders. If you have people that could apply, you learn about. This is really, at this point, most of America needs the, you know, this is essentially the same thing as the $1,200 check. If you're a business owner, you want to, if you didn't get one of these loans, you need to go call your lender, or call Alexander or Alpine Bank or one of these local community banks.
Yeah, I think Alex, 120 billion left in the program, something like that.
I think it's slightly less than that now, but they did a good job with the second round, getting it to a level where it was, you know, the first round was a mad dash, right? And a bunch of people got turned over, and you know, Mark knows it well. I was working like 20 hours a day, just, you know, barely sleeping because, you know, it was a race against time. You know, the nice part was we managed to get everybody who applied in, and that was not the case for a lot of people in the first round. But by now, they made the program big enough the second time that there's available funds. You know, one of the things for the second round that we really focused on, or to Mark's point, nonprofits, sole proprietors in our community. And we did nonprofits more broadly, because there are nonprofits all over the country who, I want to say that the big five banks own 55% of all checking accounts. And they dropped the ball in the first round. And then many of them just stopped accepting applications. And so we really prioritize nonprofits to try and help them out. And for us, it didn't particularly matter geography. We obviously were very diligent about documentation, et cetera, know your customer laws, but that was a group that really got left behind, and they might have a small budget. They might never have a loan, right? Because it's hard to bank nonprofits oftentimes when we're talking about lending relationships. But those are the exact kinds of things that are like heartbeats of communities. That they're feeding the hungry, you know, housing the homeless. Those are the kinds of things that, you know, you don't want that social safety network to go away. And so, yeah, I definitely say if there are nonprofits that you know that don't have one of these, please make sure to get it for them. At least float it. I know a handful of boards who thought about it, and you know, there was not always certainty that they needed to do this, and then once stuff really started to go down in April, everybody just fled to it.
Yeah. Yeah, I would add to that too. You know, any partnerships, I think in the beginning, the partnerships were a little bit confused because it looked like they could only apply on behalf of their employees, but if the general partners had guaranteed payments or self-employment income, that they had to apply on their own as an independent contractor, self-employed person. And they came back and they said, no, you can't apply through, you need to apply through the partnership. Oh, whoops, some of these partnerships have already applied. And so they did come back, I believe, and say that those partnerships could reapply to get additional funding for those partners. So if folks haven't done that yet, they should also do that as well.
Yeah, nice point, Brad. Well, guys, I know on behalf of Tracy and Diana, you still with us? Did you just get to cut out in the beginning? Are you going to make an appearance at the end here? We're going to pull you back in.
Oh, I think she's on the call now.
Yeah, I know. Just giving her a hard time. But thank you guys for pulling this together. And Brad, thanks for your insight. Alexander, thanks for your insight. And let's have a good weekend. Cheers.
Thanks, guys. Appreciate it.
Bye.
Thank you. Cheers.